Welcome to the Rigatoni Capital podcast. I am your host, Colin. It is the morning of March 17th, Tuesday, pre-market, and it is a very cold but sunny day on Wall Street. We had some thunderstorms that knocked out a lot of people's electricity last night out in the suburbs. And yeah, that was cool. And I see oil here, WTI is trading at 96.8. And this still is a market based on the price of US crude. That is the market we're in. It's still an Iran war market. And no matter how much investors like myself got distracted with Nvidia's GTC keynote speech yesterday, still go back to Iran war and energy costs. And the markets don't want to see a energy crisis here, which hopefully we won't get. And let's see, I'm going to look at S&P is up. No, it's not. I'm going to look at the market. Seems to be flat, slightly up. We can look at SPY instead. SPY, we are up a decent amount this morning, if you can see, 0.25%. So definitely, and Bitcoin has been down as well this morning when I woke up, but it was hitting almost, I think we hit 76 or 75K last night, and then it has sold back down. And yeah, so that's what we got going on here. What I want to talk about is Nvidia's CEO, Nvidia Jensen Huang projects $1 trillion in AI chip sales as new computing era begins. This is the AI future, Jensen Huang said at the company's GTC conference, speaking about the shift to inference. Okay. And then what happened was Nvidia shares pump and dump after CEO Jensen expects at least $1 trillion in revenue by 2027. Remember, I told you guys yesterday, do not trade around this. Don't trade around headlines. Any little kids that were trading Nvidia during the GTC got whacked, and I bet you hedge funds. And hey, look, Shyam Sankar is on CNBC this morning. That's cool. I wrote a whole post about him. He's doing his rounds. It's called the Defense Reformation. I wish we could play it during this, but I don't think I'm allowed to do that. Shyam Sankar is the CTO of Palantir. I wrote a whole post about him on my Substack if you want to read that. It's not about him per se, but it's about what he said about the defense manufacturers here in the United States and in the West. And I'll go over that later. This is what it looks like, the next defense industrial revolution. I wrote a post about it. It came out Monday on Rigatoni Capital's Substack. All right, so let's quickly play Nvidia. This is about 2 minutes. Let's see if we can play this when he discussed the $1 trillion in revenue by 2027. So there's a lot of confusion. Remember, GTC is a Super Bowl of tech and electronics, I believe. And, you know, it has become really just the Jensen Huang show. And Jensen Huang does the opening ceremony, which is on Monday. And then GTC should also continue throughout this week, I believe. But really only people care about is Monday's GTC's keynote speech by Jensen Huang. And there's his clients, his customers, game developers, all these different types of clientele sit in this stand that was like 20,000, 30,000 people. It was in San Jose, like where the hockey team plays. And he pretty much is talking to all these different segments of people in his ecosystem, which are game developers, like I said, and customers and clients. And then there's this finance investor community, which is us. It's the people that bought Nvidia about 10 years ago, and we think we're hot shit because Jensen Huang made us small little fortunes. And now we are watching this keynote speech. So when he said that I expect at least $1 trillion in revenue by 2027, the headline is super misleading. The slide that he gives is super misleading and confusing. You have to look at it a little bit closer, and we'll go over what he means by it. And I was disappointed by that slide. And here's somebody that I'm up 40 times on this. I'm up 3,900% on my Nvidia bag. I did take some profits a year ago, but just a little bit. I trimmed, but it's my largest holding in my portfolio. I'm up 3,900% on Nvidia shares, and I'm not selling, but I was a little disappointed by this slide. I don't like these really large, lofty expectations, and he's got to remember that investors are listening to this. But anyway, let's watch it real quick. Hopefully this works.
Well, I'm here to tell you that right now where I stand, a few short months after GTC DC, 1 year after last GTC, right here where I stand, I see through 2027 at least $1 trillion. Now, does it make any sense? And that's what I'm going to spend the rest of the time talking about. In fact, we are going to be short. I am certain computing demand will be much higher than that. And there's a reason for that. So the first thing is, we did a lot of work in the last year. Of course, as you know, 2025 was NVIDIA's year of inference. We wanted to make sure that not only were we good at training and post-training, that we were incredibly good at every single phase of AI, so that the investments that were made, investments made in our infrastructure, could scale out for as long as they would like to use it. And the useful life of NVIDIA's infrastructure would be long, and therefore the cost would be incredibly low. The longer you could use it, the lower the cost. There's no question in my mind. NVIDIA systems are the lowest cost infrastructure you could get for AI infrastructure in the world. And so the first part was, last year was all about AI for inference, and it drove this inflection point. Simultaneously, we were very pleased last year that Anthropic has come to NVIDIA, that MSL, Meta SL, has chosen NVIDIA. And meanwhile, and as a collection, as a group, this represents 1/3 of the world's AI compute, open source models. Open source models have reached near the frontier, and it is literally everywhere. And NVIDIA, as you know, today, we're the only platform in the world today that runs every single domain of AI across every single one of these AI models, in language and biology, in computer graphics, computer vision, in speech.
Okay, hopefully that worked. And if you're not watching, there is the famous slide, which I joked around on Substack and said I'm going to hang it in my living room, showing the $1 trillion revenue estimate. So back, I guess, I don't know when it was. Maybe it was in the year 2025. I don't know. But he said that maybe it was 2024, maybe it was early 2025, but he had suggested that through 2025 through 2026, that his, actually, I think I'm getting this wrong. This is the problem with this slide. Nobody understands it. People that have millions of followers and are like social media influencers that have podcasts on investing in stocks actually don't understand it, because they actually made a mistake. I don't remember the guy's name. It doesn't matter. I'm not trying to call him out or anything, but he actually thought it meant $1 trillion in sales revenue for the year 2027. And obviously that is a huge, it's way off, way off. They did like 131 billion, I'm going to guess, in revenue this year, in the year 2025. Okay, so anyway, as you can see here, this is what's making it really confusing. Let's just take off the left side chart that says where he first suggested that they would hit $500 billion. Let's just look at the $1 trillion estimate. And it says $1 trillion still growing. So this is the year 2025 through 2027. What he's trying to say is he sees a cumulative revenue totaling $1 trillion. So you have to add 2025, 2026, and 2027, and that equates to $1 trillion in sales. Like I said, if you just read the headline, it sounds like he's saying that he's expecting $1 trillion in sales for only the year 2027. Of course, that's not true. It's a cumulative 3-year period. Okay. Now, Studio Innovation on Substack said, kind of is going to break it down for us on what exactly was said during that little section. It says, last year I said Nvidia, Jensen Huang said $500 billion in demand. Now I see that number at a minimum 1 trillion, Jensen Huang said. Nvidia trades at 24 times forward earnings today. We understand that. Revenues compounding at 68.8% over 3 years. I understand that. Okay. At $1 trillion revenue and 55.6 net margins, net income approaches 556 billion. But here's the confusion. At $1 trillion revenue, that's over 3 years. So after it's all said and done and the end of 2027 is here, they would have had a net income of $556 billion. That's the confusing thing. And then he says, here's what the market cap looks like across scenarios. At 15 times earnings, they would be valued at 8.3 trillion. This is where I think things get too confusing. And then, of course, the market, in my opinion, dumped after the slide. It was floating up, and maybe even this slide made it spike, and then it sold off quickly. Part of the reason I thought maybe it had sold off is because it shows how hyperscalers show 60% of the estimate revenue. Okay. And then the other 40% are all of his other customers. That includes sovereign AI and industrial enterprises and all of his other customers and gaming and all that stuff. So possibly that was why I thought it had sold off, because you're putting too much. You're not, your bucket is really just focused on the hyperscalers as your customer base. You lose a Google in terms of spending or something like that, that would impact his revenue estimates. Okay. So I showed you how this is a cumulative $1 trillion estimate. Okay. Now I'm going to show you what Wall Street estimates are. So maybe this, for people that aren't watching, it shows you that in the year of 2025, last year, revenue estimates totaled $130 billion. From what I understand, Wall Street expects Nvidia to hit 216 billion, let's say, for the year 2026. That's how I understand it. That should include the nice no, that would have been Q4. No, their Q1 earnings, I believe, already came out, right? And that was the 72 billion or 78 billion. That really was impressive. I can't remember the exact number, but like January, the year 2027, we can estimate, and this is like Wall Street, I believe, that's giving these estimates, and then they kind of like take the average. They're saying $366 billion for the year 2027. Okay. And then even 2028, there's some estimates. It looks like they're saying 468 billion. So even if I do the math here and I just take 2025 and 2026, I'm not getting anywhere near 500 billion, which is what he had estimated. I guess let's do it differently. Let's do 130 plus 215, and then let's do 2027 estimates, right? Am I doing this properly? So that's how you get to the 500 billion. So he's definitely, if you're adding 2025, 2026, and 2027, you definitely hit his 500 billion estimate mark if you add the three revenues up. And again, we're just guessing what 2027 estimates are going to be. He's saying that they're going to hit 1 trillion. I show that this is 711 billion right now. So they are really overestimating, overpromising. And I don't like that as an investor. I never want to see someone like Nvidia, who's my largest holding, start over promising. And I personally don't think they're going to hit 1 trillion in revenue by as a cumulative through 2025 through 2027. I personally don't think that's possible. But is it plausible? Somebody asked. I don't know. I'm not smart enough to know if it's plausible. But why even put yourself in this situation? That's my problem. I wish you would have never put this slide out. And it makes sense that the stock sold off. Now it's trending back up towards 184 this morning, 184 per share. Let me show you Amazon. Amazon is the only estimated, the true $1 trillion monster in the room. It's the only stock I'm aware of. I guess you could argue Walmart too, because Walmart's going to eventually hit 1 trillion in revenue as well. But Amazon is on track to hit 1 trillion in revenue well before Walmart does in the year 2028. The estimate 2028 total revenue from Wall Street's estimates is a $1 trillion sales revenue per year. That's unbelievable. That's crazy. Now, Amazon doesn't make anywhere near the margins Nvidia does, but it's still cool to see the first $1 trillion company ever from what I understand. I think it's the only $1 trillion company to ever exist in sales per year, and that'll be the year 2028. Hopefully I'm not messing that up. Hopefully like somebody like Saudi Aramco, somebody I'm not aware of, maybe hitting this crazy number. But remember, Nvidia makes much healthier. It makes like 50% margins. Like it's a whole different ballgame. But anyway, yeah, I think that's where the confusion comes from me. Now, Phil Pinelli had mentioned that the CFO of Nvidia will be doing a press conference, or I guess a conference call, not a press conference, a conference call maybe. He says, Phil Pinelli on Substack, who will be on the podcast tomorrow, actually, as a guest, but it will come out on Friday morning. He said he thinks that next year, 2027, is another 500 billion. I show 366 billion as my estimate. So he thinks that we definitely can hit the 1 trillion from what I understand from what he wrote. And that's fine. I'm not saying we can't. I'm just saying I don't think we will. He says, I will be on the analyst call at noon to get clarification from Coletti Kress, CFO. So yeah, if she's doing a analyst call where she'll probably have questions asked to her about this to clarify this, that slide that will be today at 12 p.m., I'm guessing East Coast time. So that would be cool for me to listen to that. I didn't know that. So thank you, Phil, for letting me know. I'll jump on that too, if possible. So yeah, I guess I definitely could be wrong. I definitely could be confused. I'm like I said, remember, this is somebody that's telling you that doesn't mean I'm smart, but I do have skin in the game. It's my largest holding in my portfolio. I own 16%. I'll show you what it looks like back from March 9th. It's going to be outdated, super outdated. I think like Nvidia, I'm up maybe 4,000% now. This is of March 9th. So remember, we had a lot of volatility because of the war and everything like that. But you can see Nvidia is 16% of my portfolio right here. And I also obviously own Nvidia in the QQQ, which is my second largest holding. So I own a good amount of Nvidia. So I'm telling you, I'm confused, and I follow the stock pretty closely. I'm confused. So if you guys think I'm an idiot, or if I'm being stupid, just let me know. Hey, I could use the comments on YouTube. All right, guys. So let's go to real quick. We're almost done. Today's going to be a quick show, hopefully. Ray Dalio wrote a post that came out yesterday, March 16th on Substack. I personally think Ray Dalio is great, but I don't agree with some of his stuff. And that's like very normal. Like I have so much respect for all of these Michael Burrys and Ray Dalios, and I love that they're on Substack and I want to support them. Doesn't mean I agree with everything they're saying. His post is titled, "It all comes down to who controls the Strait of Hormuz, the final battle. I have found that most wars are filled with big disagreements about what is likely to happen and big surprises." Completely agree with that. But his number one point is that the United States will be judged to have lost the war when it's all said and done, and Iran will be judged to have won. I'm just a little unsure. I don't know if I agree with that. Number two, he says, if, on the other hand, the Strait of Hormuz is left in the hands of the Iranians to use a weapon to threaten American allies in the Gulf and the world economy more broadly, everyone will be hostage to the Iranians, and Donald Trump will be perceived to have picked a fight and lost. He will have left U.S. allies in the region with a huge problem, and he will lose credibility, especially given what he has said. Okay. I'm not going to go through everything here. And then I want to read this part. Number 4, his point is the direct and indirect effects of this final battle will ripple around the world, affecting trade flows, capital flows, and geopolitical developments with Russia, North Korea, Cuba, Ukraine, Europe, India, Japan. Okay, so he's trying to forecast if this occurs, that the U.S. is claimed to have lost the war. What are the effects on this? And of course, this will be a huge stain in the history books for Trump and stuff like that. I'm going to tell you just my initial thoughts on this idea is that it's possible that this outcome does occur, like the Ray Dalio brainstorming thought exercise. It's a thought exercise, right? I can see that route, but I also can see a route where the US was just too dominant, even though Iran had the autonomous weaponry that caused a lot of trouble, like the drones and the Strait of Hormuz and stuff like that. I still think that there's a path where the US just demolishes Iran and the regime there. And however, I could see it then, no boots on the ground, but I could see the Strait of Hormuz eventually opening, because this affects someone like China more than the US. So they have incentives. They have that Strait of Hormuz and a ceasefire there, the Strait of Hormuz. And then we also see, oh God, what was I saying? I'm losing my train of thought. Awful podcast for me to lose my train of thought right now. The Strait of Hormuz is opening. And just like what I'm trying to say is Iran just never had a chance. They never had a chance in this scenario, even though they were building up. They have some of these autonomous weapons that are cheap, and that's hard for the US and the West to compete with. But they just never could compete with the Palantirs, the satellites, the missile strikes. And that's what I was going to say, is that this will be prolonged in a sense where it becomes a special ops type of war. So it starts to, you don't see it in the headlines every morning when you open up the Wall Street Journal. The Iran war stories and Israel stories, they kind of disappear, and people get used to this war. Is it still going on? I don't understand. But throughout the next few years, unfortunately, you have these special ops, kind of like what we saw in Afghanistan, and then we saw and a lot of CI. That's the type of boots on the ground I'm thinking of. I'm not a military war specialist. I have no idea what's going to happen, but I'm just saying, I guess I could see a path where U.S. does come out in some kind of victory. And of course, like Ray Dalio is kind of hinting, it really, sometimes it's all what the media brainwashes consumers on who won the war. It doesn't mean it's even true. I'm not sure if Ray Dalio is saying that, but that's kind of what I thought he was maybe suggesting here. Anyway, something interesting to read. If you're on Substack, I suggest it. Okay, and then here's one problem that I guess Ray Dalio could be correct on, which I don't know if he suggested. I'm sure he does because it's a long post, but just the refined rare earth issue and trying to China choke supply. For example, ammo metal is up 557%. Remember, refined silver is up tons. All of the inputs that go into missiles and bullets and weapons and all these type of refined rare earths, China has the market. They own the market. And why wouldn't they have export controls if we attack their ally Iran? It just doesn't make any sense. So that is going to be, in my opinion, that could be why the US loses this war. What are they calling it? They're calling it tungsten prices. Tungsten prices. These are the prices of munitions metal have surged over the past year. And you can see how every single time I come on this podcast and we discuss stuff, we always have this type of supply chain issue, and how the Raytheons, the RTX, Northrop Grumman, Lockheed Martin, how are they going to restock everything so quickly? How are we going to build things here in the US? And that's probably why Shyam Sankar was on CNBC this morning to kind of tell everybody, like, hey, these defense manufacturers have some serious problems in terms of input costs and trying to get product inputs and raw materials. That it's a huge problem, and Palantir is trying to solve this particular problem, in my opinion. Palantir can be something that helps it. And Michael Burry would disagree with that. He thinks Palantir wouldn't. I don't believe he thinks Palantir would works in that kind of way. From what I understand, Michael Burry thinks that Palantir doesn't make good decision making, isn't a ontology that makes good decision making. Like, he's trying to say it's kind of like hype, and I would disagree with that. So that sucks to disagree with Michael Burry. It's the last person I wanted to fight in terms of when I bought Palantir. I had no idea he was going to have an army with his shorts against Palantir, thinking it's overhyped. That's the worst possible outcome for me. It really is. Anyway, I'm still holding on to my Palantir shares. I'm down slightly. Okay. And then here's a post on Zero Hedge. It says, every week in 2026 has felt like a year. Top Goldman macro trader ruminates on everything, everywhere, all at once. And the volatility is incredible in gas, in yields, in emerging markets, in South Korea, blah, blah, blah. The dollar, I don't think the Dixie has been really that volatile, but you can see the volatility in commodities and everything and yada, yada, yada. It's just crazy. But if you are following the Rigatoni Capital Substack, I believe it was either 2 summers ago, I believe. I believe it was like, I can't remember. Maybe it was this summer. Okay, yeah, it was last summer. And I did a post here on August 12th, 2025. And it was called Entering Headline Risk Season, So Long Sweeney Jeans, kind of like we're turning a chapter. The biggest news of the summer of 2025, if you guys remember, was Sydney Sweeney, her jeans with American Eagle. That was like the biggest headline. It was so quiet between June and July 2025 that it was eerily quiet. And the stock market was just slowly trading up every day, like just like a slow burn up. It was, my point was like, look, it's time to realize that there'll never be a time like this in a long time. This is like, you'll remember, you'll first of all, we already forgot this time frame when things weren't happening, when there was no volatility, when there was no headline risk. We look back, we don't even remember that. And that was almost 9 months ago. We'll never, we completely, as investors, we have awful memories as long-term investors too. We just don't remember this time. But I was trying to say, like, things are not volatile now, but don't worry, they'll be volatile again. And here we are, March 2026, craziest stock market. One of the craziest times I've ever seen. AI Investing Lab is a Substack I subscribe to. Matej Predvo. I'm not going to try to say his name. I just suck at saying names. It's sad. But I thought this was interesting because he was talking about the Notebook LM. And I think it was Monday's wife on Substack. She was saying like how cool Notebook LM is, but I'm more interested in it for the graphics. And I'll show you an example of what it can do, which is right here. If you guys can see this, it is like one of these presentation slides that, like, it's an infographic, I guess is what you call these, right? So it has, you send this LLM on, which is, I guess, part of Google, Gemini, I'm guessing. So you send it all of your documents, all like your PDFs and whatever it is that you're working on. So it takes only the internal documents you have, and then it gives you a really nice, cool poster. It's just so cool. I think this is so cool because I love graphics and I love this type of stuff. It says that the one he did is called the 2026 Hormuz Crisis, Global Energy and Defense Under Siege. And he shows you like the crisis impact, February 28th strikes and after, and the pre-conflict baselines and macroeconomic fallout and investor pivots. And I don't know. I'm not going to, it's hard for me to explain a poster or an infographic, whatever you want to say. But definitely Notebook LM is a big deal, I think. I think it's a big deal. And I'm pretty sure it has to do with this is a Gemini Google thing, isn't it? Isn't this Gemini? Isn't this Google? And it's like free, I believe. I mean, people pay for Gemini 3.0 and it's a $20, just like any LLM. So I guess if you use too many tokens or something, he says, instead of reading dozens of PDFs, you can use AI Notebook LM that lets you ask precise questions and get answers grounded in sources you actually trust. That's really cool. What do you guys think about Notebook LM? And like I told you, I wrote this post on Monday that came out about the defense contractors. Everybody's talking about it. Everybody's talking about, like, Zero Hedge did a post about the Last Supper in 1993. I did that post. So I guess I'm doing what other people are doing. And then here in Wall Street Journal this morning, there's a article titled "Why Defense Contractor Stocks Aren't Rallying." And war should mean higher military spending, but things aren't so simple for the biggest weapons makers. And that's so true, because why would you think that it would be that easy? It's not how the world works. Shows you how defense manufacturing, the ITA is what I would look at. And you can see how the ITA has just been on a tear before this happened, starting in 2024 and probably leading up to Trump's election. I mean, the ITA has just been on fire. It's a hot place to be in terms of the Halo stocks and staying away from software type of stocks. And, the Republicans winning and all of this stuff allowed for defense manufacturers to really have a nice run. And then it shows you average share forward earnings, multiple of large defense primes, and it shows you how expensive these stocks have become on a forward earnings basis. So, and of course, if you look at, we'll look at GE, for example. What is that stock ticker? I know it used to be GE. Is it still GE? GE Aerospace is the company that is in the ITA. I mean, that's been the winner. The stock has been crazy. Okay, so anyway, wanted to just bring this up, how just because a war started doesn't mean defense stocks like trade up to the upside. And they did for like the day after or two. And then you can see they kind of all, investors probably took some profits and stuff. I don't think it's a big sell-off. If you look at the ITA, which we looked at the other day, it's really not that big of a sell-off to think that you're buying like a dip, in my opinion. You are trading below the 50-day, nowhere near close to the 200-day. I think it's business as usual. I think the ITA is going to do well in these uncertain times. I think it's a good place to be, and I explained in my post yesterday that, yeah, like eventually Anduril Industries, Anduril is private, but eventually they're going to IPO, right? I would hope so. Palmer Luckey's company. Will they be in the ITA? I think so. Will SpaceX be in the ITA? I don't know. Palantir is not in the ITA, but Exxon Enterprises is in the ITA. So just know what you're looking at before you want to make some kind of decision or investment decision, right? So, hey, that's all I got for you guys. And it looks like tonight, which is crazy because Venezuela played last night and they beat Italy. So the U.S. faces Venezuela in the 2026 World Baseball Classic tonight, Tuesday, March 17th at 8 p.m. Has nothing to do with investing, but wow, is that crazy? I would really recommend watching this game. It's hopefully will be a good one. And you can follow me on Spotify, YouTube, Apple Podcasts, and of course, Rigatoni Capital is on Substack. Thank you so much and have a wonderful day. Bye.